Well, hello, everybody. Happy Friday. I'm just letting everyone in here. Let's get the screens going. I'm coming to you from the studio here in Neisner, and Scott is on his travels at the moment. Scott, where are you coming in from? Are you somewhere on a distant planet, or are you on still South Africa? Or where are you?
I'm in Elgin, in the winelands in the heart of the mountains.
Ah, sounds terrible.
The weather's spectacular. Um, yeah, no, it's Cape Town at its finest.
Awesome.
So, do you want me to rock and roll?
Okay, so yeah, I see there's something wrong with the sound. No, is it my side? No. Okay, cool. Yeah, we got you. Go for it, Scott.
So, I just want to check how's it all coming through?
Yeah, you're spot on. You're all good.
Okay, um, cool. Okay, everyone. So, welcome to Weekly Friday, Alex. I was actually just going. Maybe Shanika can help you if you wouldn't mind. Just put the link into the Success Resources Wealth Accelerator WhatsApp group. Um, I was trying to do it now, but all Alex has updated my cell phone, and I basically like can't get into anything. I can't get into banking, Airbnb, Facebook, like nothing, literally nothing. Right? So I might as well be in Timbuktu. Anyway, what we're going to do today is we are going to focus on the next module. So as always, this is the Q&A. So if anyone's got any questions, please fire away. We had an incredibly big week. I spoke at the last Friday about this, but this Wednesday we had the mastermind with our institutional partners. So it was our mastermind session. I felt it was one of the better ones we've ever had. It was pretty amazing, and I don't know what you think, Alex, but we were oversubscribed. So that basically means we raised more money than we were allocated in 7 days, which is phenomenal. To be able to get a seat at the table, it was quite special. So yeah, quite a big week to celebrate. So for all of you that participated, I know I participated. I think Alex, you also participated. But it's pretty cool to be sitting at the seat with the top people in Silicon Valley. And
Yeah,
yeah,
pretty much. Like, I think Scott, it'll be quite interesting to see how many people are today. If you could just go give us a little bit of thumbs up, there's a option that you can either do on Zoom, but if you're celebrating with us, give us a thumbs up so we can see. There we go. We got a few thumbs up going there. Okay, awesome. So yeah, very exciting. I'm truly like Scott. We were chatting about this last night. This is one of those trophy moment or what is it called? Trophy assets, right? I mean, it's definitely one for the books. So yeah, very happy with that.
yeah, no, it is something that's. Have I not got my camera on? Oh, there, yeah. Yeah, no, look, it's an amazing opportunity. Funny enough, Alex, I wouldn't call it a trophy asset. I would call it a trophy partner, which I've never said before, but I've never ever in my life had the ability to partner with this. And just to reiterate for those that aren't part of the mastermind, there's only three parties that are participating in this deal. There's a company that's within the top 20 biggest companies in Japan. Their balance sheet is $30 billion. Their revenue is $100 billion, and they're investing $30 million in this deal. There's a family office that is investing $5 million, and there's us. Um, it doesn't actually get better than that in terms of getting a seat at the table. So it is truly exciting. So what I'd like to do is, if anyone's got any questions, please fire away. I do remind people that this is Friday Q&A, question and answer, and not Friday Alex and Scott talking session, because then that would be ANS versus Q&A. Anyway, but what we'll do if there's no questions, and Chiba, I can see your question, when is the next deal? Chiba, that's a great question. And the answer is we don't know, because we're always looking and speaking to our partners. And the answer to your question is be ready to be ready, because people missed out on the self-storage deal because they weren't ready. I know a lot of people missed out on this data center deal because it was live and up and closed within 7 days. And the bottom line is be ready for the next one. I don't know how quickly it comes. When a deal comes, it comes. It does remind me. Alex and I were celebrating last night. We had an evening at my house on the boat and in the jacuzzi, and You know, it was interesting because when we did our first medical deal back in 2014, we had 90 days and we raised $6 million, but we had 90 days to do it. Nowadays, it seems to be that if a deal's a quality deal, you've got like a week or 2 weeks. Um, so anyway, I think it's hopefully for all you investors, and particularly if you're a shareholder, you should be very grateful that we spent $25 million building Wealth Migrate. And the reason being is we can participate. You know, without Wealth Migrate, we would never even be able to, logistically, it would be impossible to get involved in these deals. So it is quite exciting. Okay, what are we going to do today? We are going to pivot to this here. Oh, what happened? I thought I had it open for you. So I work with my coach, and if you believe in coaching, which you should, I basically do what I teach. So I have a coach every week, and she's amazing, and she really has made a massive transformation in my life over the last 12 months. So yesterday we named this the 6 stages of wealth transformation pack, and we're working our way through it. So as you know, we're in the process of stage one, return to the inner child, the investor journey we did last week. And this week, it's the investor mindset. Okay, so this here is the white paper. And I'll tell you what I'll do. I'm going to put it in the chat room for everyone. Yeah, so you should all have it in the chat room. It's 5 megs. It's just uploading. Okay, so let's rock and roll. So this one's a bit of a longer one, but it doesn't matter. It's got my story. So this is really based on the whole Robert Kiyosaki. So the premise is, I'm not going to spend too much time on it because I'm sure everyone's seen it, but you've got the employee, which is you have a job. You've got the self-employed, which is you own a job. That's like a doctor, an accountant, a lawyer. You've got a business owner that has a system and people who work for you. And you've got an investor, and that's where your money works for you. So why mindset is key to unlocking wealth. Wealth is not built through hard work alone. It's built through strategic thinking and the right mindset. Most people operate in employee, self-employed, or business owner quadrants where they trade time or effort for money. The top 1%, however, reside in the investor quadrant. They make their money work for them. The bridge is the quadrant is mindset, specifically the mindset of the investor. Now, I don't know if you remember or if you've seen the video, but when I interviewed Robert Kiyosaki, I literally said to him, what does it take to have an investor mindset? And this whole white paper was built on the back of that question. So to invest like the wealthy, you must think like the wealthy. To shift an I quadrant, you must receive proper training, surround yourself with like-minded investors, model, master, and partner with those that are already there. I originally learned this from Robert Kiyosaki, Rich Dad Poor Dad, as the mindset shift to make my money work for me was profound. This is the cycle where people find themselves. So it's this whole question of how to get here. Most people spend their whole life wondering, stressing, and wishing to reach the investor quadrant. This report outlines how to do that. So, what are the 10 core mindset traits of an investor? Leverage over labor. So, prefers systems, capital, and partnerships over time and effort. Delayed gratification. So, understands the compounding effect of time and patience. Risk as managed opportunity. Sees risk as something to be understood, not feared. Long-term vision. Focuses on generational wealth, not short-term wins. Continuous education, invests in learning, personal development, mentorship, and community. Strategic diversification, builds across geographies, assets, and partners. Cash flow first, prioritizes assets that produce income over time. Detachment from outcome, operates from logic, not emotion and panic. So we're going to talk more about the psychology of investing later. This is all about the psychology. Focus on assets, not income. Measure net worth, not paychecks. Abundance mentality, believe wealth is abundant and scalable through smart strategy. And then what we've done is that we've built for each person. So whether you're an employee, whether you're self-employed, or whether you're a business owner, what we've done is created a map book or a framework as to how you can move to the investor mindset. So the traits of an employee mindset are that you're security driven, you value your steady job and job benefits, you follow instructions, avoid risk, you trade time for money, you're reluctant to invest without guarantees, you often view investing as gambling or for the rich, you don't take budgeting, being efficient with tax or any financial discipline seriously, you don't invest in their personal development, specifically around investing. and you just trust advice of the financial industry and what they're told about their retirement using traditional pensions and savings products. What do you have to do to become an investor? You need to move from security to freedom. You need to move from paycheck dependency to cash flow producing assets. You need to move from employment stability to financial adaptability. You need from working hard to working smart with leverage. You need to follow Warren Buffett's principle that the best investment can be the one you make in oneself. You need to take responsibility and accountability for their finances. So before I go any further, can anyone, what are your thoughts on that? Does this make sense in terms of the employee mindset? Chiba, if the sign quality is poor, it is what it is. I'm sitting in the middle of the mountains. Yeah, it's the best I can do. So does this make sense in terms of what I've just taken everyone through? Any comments, any questions, any thoughts?
I think, Scott, while we wait for some feedback, I think the biggest thing for me when I read through these documents, and we've looked at these documents many times, and also actually even spoken through the detail of how to get someone from where they are to the next quadrant or the next level or the next stage, is just being very much aware of taking, also again in coaching, taking stock. Where are you actually at? Are you in this quadrant? Are you in that quadrant? What are the limitations that you are facing at the moment in the portfolio? What challenges are you currently experiencing? And once you understand like where you're at and what challenges you are facing, then it's actually quite simple to go, okay, I need to move from an employee quadrant to the business owner quadrant, or the business owner or employee quadrant from that perspective. So I think it's just it's a very nice way of just taking stock of where you're at and reading through it and whatever resonated with you as an investor. And then, yeah, the next steps are quite simple from that perspective. We've given all the documents so far. So just interesting to see it from that perspective.
Yeah, look, I think the whole purpose for these documents is, like, most of the stuff is common sense, but when it's right in front of you, I like to call it a brick in the moment, brick in the face moment. Let's go to the self-employed. These are the very smart people. These are the doctors, the accountants, the lawyers. As Robert Kiyosaki says, he's a C grade student. These are the A grade students who work for him, the C grade student. So the traits of the self-employed, they're control driven. So if it wants to get it done right, I must do it myself. Alex, should I just read that one again? Control driven. If I want to get it done right, I'll do it myself. Alex, should I read that one again?
That doesn't resonate at all, Scott. I don't know what you're talking about.
Wears many hats, trades hours for earnings, equates busyness with success, often lacks systems or team scalability, distrusts passive income models, too busy to worry about their investments, their business is their world. So again, I'm sure that many people will resonate with that, all the professionals. And then shift required to become an investor. Just by the way, my brother's an anesthetist, and I mean, this sums him up perfectly. I mean, he earns a fortune, but he only makes money when he's sticking needles in people's arms. Shift required to become an investor, from control to trust and collaboration, from earning to allocating, from specialist to strategist, from being the business to building wealth outside the business, allocating time to be able to learn, invest, and prioritize their personal wealth outside the business. It's so interesting. I get this all the time, and people are like, I don't have time to do investing or finances or wealth. And I always kind of give them something fairly common, because everyone knows this. I'm like, well, if you didn't have time for your health, how will you be in 10 years? Or if you didn't have time for your relationships, how would you be in 10 years? Well, it's exactly the same with your finances. If you don't make time, then it's going to not be a happy experience in 10 years' time. So that's the shift. Again, any thoughts or comments before we move on? I know these things are fairly self-explanatory. So, what I'd like to do is we'll get to the end, and then we're going to break into breakout rooms and have a conversation. Now, the one that's probably the hardest, because these people are making money, they feel wealthy, they go on international trips, but they feel trapped because they still only work as hard as they hustle. And when they hustle, they make lots of money, but they don't have their money working for them yet. Traits of a business owner. So, and a lot of our mastermind people are fall in this category. Focused on scaling business systems, seeks leverage through people and processes. Financial freedom is a someday once the business exits. By the way, Alex and I were talking about this last night. Maybe, Alex, you can chat GPT it while we're talking. I know that the stats are 96% of all businesses fail within 10 years. I'd like you to chat GPT. What are the statistics of an entrepreneur starting a business and having a successful exit? So let's see what ChatGPT comes up with. Okay, they're tied to reinvesting the profits back into their business. That's a massive one. You know, they always think I'll take my profits, reinvest, but they got all their eggs in one basket. Often lacks diversification outside of their own business, has money, but does not know how to make their money work for them, and too busy to find out, not knowing who to trust. I've met thousands of people like this from all over the world. Right, shift required to become an investor. So you need to go from reinvestment in the business to diversification outside of the business, from single entity risk, as in having all your money in your business, to a portfolio stability, from operator to allocator, from chasing growth to preserving and expanding wealth, from doing it alone to achieving peace of mind through partnership and collaboration. You're prepared to make a proper investment in bringing the right partners on board to ensure there's a sustainable and resilient plan for your wealth outside your business. They understand the ROI of investment in their business and have understood the correlation with their wealth. It's quite interesting. There's two things that are important here. The one is that often what's made business owners really successful, which is being decisive, being in control, acting quickly, making good, fast decisions. It's the complete opposite in wealth. You know, in wealth, it's long-term, it's acting slowly, it's having partners, and often the very skills that have made you successful in business are the things that make you fail in investing. And Callio, who's our family office, have specialized in helping business owners and leaders, you know, of big corporates look after their wealth, because they tend to find that those people are the ones who need the help most. And I know Alan's online, and Alan and I were having a fascinating meeting, and Anthony gave an analogy which I'd never heard before, but I quite liked it. And he said, you know, if you're running a big company, you know, you're always going to have a CFO. And, you know, you pay CFO, the chief financial officer, you pay them top dollar to run your business. And yet most people aren't prepared to pay to have a CFO of their life. And it's really interesting. So as a business owner, you've got a CFO in your business. And, you know, when you look at the mastermind and particularly the family office, it's like having a CFO of your personal wealth. Okay, any thoughts or comments on this business owner one? Because I think this is the one that hits home the hardest for most people when they realize kind of where they are and what they need to do. Okay, I'm just going to keep going if I don't see any chats. Do me a favor, just put in the chat, I'm alive, so that I know I'm not talking to myself. Because I'm only on one camera, so sorry, on one screen, so I've switched off the cameras so that I can actually read the screen. Okay, the three limiting mindsets holding you back. Okay, so the employee mindset trap is the fear of losing a steady income. So these are people who don't want to leave their job because they're worried that they're going to, you know, not have their next paycheck. The self-employed mindset is addiction to control and self-worth tied to effort. So they're only as good as, you know, the amount of anesthetics they can do, yeah, whatever. And then the business owner mindset is over-identification with their business as their only asset. Like often, I mean, I've been a business owner for 21 years, and it's, you know, it's our baby. I mean, it's as important to us as our children. Each of these prevents you from building wealth that works without you. Okay, the 10 tips to move into the investor quadrant. Track your net worth monthly. Shift your focus from income to assets. So really interesting. Two things here. One is that the mastermind on the 12th of November, we're going to run an entire session with our family office. I actually just finalized it this morning, Alex, with Anthony, on tracking your net worth, the 5 most important metrics of the dashboard, etc., etc. For everyone else, we're running a 2-day workshop on the 15th and 16th of November. And I would strongly recommend that you attend that, because if you're driving in a car, you're constantly looking at your speedometer, your petrol gauge. If you're flying an airplane, you should probably be looking at your dashboard, because if you run out of petrol, you're in a serious problem. When it comes to your finance or any successful business, the only way to run a successful business and your life is to have a dashboard. And if you don't have a dashboard, then you're not going to set yourself up for success. So that's number one. Number two, join an investor community. You become who you spend time with. So all of you are part of that already, either wealth hackers and or the mastermind. Start with a passive income project. So look for projects that are, you know, paying you passive income, real estate, dividends, lending. study financial intelligence weekly. So learn about cash flow, ROI, IRR, cap rates. So this is about learning the language of investing. Create a diversification plan across geography, asset class, and time horizon. Again, that's what I mean, it's basically the basis of what our mastermind is all about. Hire a coach, join a mastermind, or have a family office. Shortcut your journey to modeling. This one for me is it's such a no-brainer. I'm so surprised so few people do it. I was actually thinking about it, Alex. We were talking about it in the jacuzzi last night. Do you mind sharing your story quickly about where you've been, and even I don't know how vulnerable you want to be, but what the impact that a coach has had for you just in the last couple of weeks? Because I think the real life story would actually be very valuable for people. We don't need the 20-minute version. I'm just talking the short story.
Okay, cool. I just wanted to kind of give you that answer on the business exits. There's lots of metrics, but I think the biggest one that kind of lands is most sources say that anything from 1 to 2.5% of startups um, achieve a relatively that is returned as a good exit through IPOs or being acquired by large institutions. And of those over the last 4 years, any exits, 75% of them has actually failed to achieve the success that they said they were going to do. So that's quite a scary number. So between 1 and 2.5, this is globally businesses that that are started actually ever get to a point where they have a possible exit. And of those people or the businesses that have an exit or are acquired or something, 75% they say so far over the last 4 years have actually not performed as they should. So yeah, it's like literally finding a needle in a haystack. Okay. And then I think so. Yeah. So the very simple storyline here is that this year has been a bit of a challenge for me in more ways than one. And I found myself in a very away state. Now, for most of you on the call that are mastermind members, you'll know what that means. But for the uninitiated, that means you are in a very, Scott, maybe if you can find that lighthouse
I'm bringing
slide,
it up.
you are very withdrawn, fearful, not excited about doing anything really, and really kind of stuck in your own head in a downward spiral. And let's see this quickly. Let's see the slide. So yeah, so you'll see on the left it's an away state, and on the right it's a towards state. And 95% of the world live in an away state, unfortunately. So it's how do you actually get back into that towards state? Motivated, ability to think clearly. It's no secret that we keep on saying that surround yourself with like-minded individuals and actually get a coach. So again, I got my coach back, and we've had I can't remember. I think it's our fourth or fifth session now that we're having. We meet every Monday at around 7 o'clock, 7 a.m. in the morning, and go through kind of where are you at, what challenges you're having, and so on and so forth. And the difference that I have seen, or again that Scott has also kind of confirmed with me, is dramatic. It's like actually wanting to dive into things, really taking the life by the horns and really, giving it the gas. So yeah, that's been my biggest takeaway so far is actually a coach is actually just a mirror, really. It's just, they're not doing anything clever or anything like that. It's just actually asking really good questions to get you out of your head and out of your downward spiral thinking and thinking high quality thinking. And yeah, that's been amazing for me, to be honest.
So in simple terms, I said to Alex last night, I said it's nice to have the racehorse back because Alex is a thoroughbred racehorse, but for this year he's been a bloody pony in the stable, eating his grass and whinging with the cows. And when he came to me a couple of weeks ago and said, Scott, I'd like to have a coach. Will the company contribute? But for me, it was like a no-brainer because I've had a coach my whole life, literally since I was in my early 20s. And if you're going to build a successful business and a successful team, then you need to empower your people. So the reason I'm telling the story, and thank you, Alex, for sharing your story, is because, this, we don't talk about this stuff, we do it. Automate investing habits, so build wealth on autopilot. So, for me, that's why we built Wealth Migrate. So that, I mean, I invested in that data center and it took me like 30 seconds. Protect the downside, learn risk management, like the top 1%. So this one is really, really important. As you know, there's an entire module in Wealth Going Global on how to find the right partners, the mistakes that, I've made in my past, and what I've learned from it. Reframe risk, see it as part of the learning curve, not a threat. Like, you will make mistakes. I had someone phone me and go, this data center project could fail. I'm like, I agree with you. Like, that's why it's opportunistic and that's why it's got a 7x return. But that's why we diversify, because there's no ways that every deal that we're going to do is going to work. And if that was the case, we might as well just put our money in the bank. And even then, people say, oh, but it's safe, it's in the bank. That's bullshit, because if you take Cyprus and Turkey, they just took people's money. So, it's nothing safe. I actually think the greatest risk in life is to risk nothing. But anyway, that's how I was brought up. And then build wealth systems, not jobs. So think like an architect, not an employee. I actually learned this originally from Roger Hamilton, and he said your money is like a plumbing system, and if it's leaking all over the place, then it doesn't matter how much money you put in the top, it's just going to leak, which is why you need the dashboards and everything to facilitate it. So final words: wealth is not built by chance; it's built by choice. Join the investor quadrant and invest like the top 1%. The transformation must begin with your mindset. And a mindset change doesn't happen in isolation. It happens through education, modeling those who's done it, and surrounding yourself with a tribe of global investors. Let this be your map. Let this be your moment. Now it's your time into the I quadrant and make your money work for you. Just by the way, I'm not going to mention the guy's name because I don't have his permission, but I thought I would let you know. I want to read this for you guys. So I sent this to Alex earlier. I have asked him for a testimonial. So he joined the mastermind about 2 years ago. Hang on, which group did I put it in, Alex? Was it the one with you and Shanika?
I think so.
Yeah. Anyway, so his name is Alvin, and that's all I'm going to say. I'm not going to go into more details. I just want to read you what he said to me this morning, because I just got a hold of him. Said, "Oh, I haven't seen you in the mastermind for a while. How are you doing?" And this is the perfect scenario actually for us. Evan, I don't know if Evan's online. Evan said exactly the same thing on Wednesday. So Alvin said, nothing wrong. So I was like, is there something wrong? I was asking him why he hasn't been there. He says, nothing wrong. I've decided to enjoy life without touching my Provident fund. All good on my side. Thanks for checking. Calio are looking after my investments on my Provident fund. It's all good and under control. I'm currently on track with the original plan that I drew up with Calio. I'm sure that we'll revise it predictably. Should be good till the age of 99, with some left for generational handover. So all on track. Thanks for asking. Pretty cool, huh?
Yeah, that's right. Scott, I see that. I don't know if you can see Derek, but he's got his hand up.
No worries, Derek. What's up, mate?
Derek, you're muted. Can't hear you. Uh, should we come back to you? Okay, cool. Okay, Scott, no, go for it. We're going to come back to him.
No worries. Okay, and then the last thing here. I mean, I don't really need to read this, but it's my personal story, and how I went from a laborer to an investor. And I always joke with people. I cum laude my undergrad degree at my honors degree at UCT, and I thought I was very, very clever. And then my first job in London was a sweeper on a construction site, and sort of it talks about the journey of how I went through it. I mean, this is my first pay slip when I was literally a sweeper. It's in my photo album, and you can see how I was an employee in London, cold in the mud. I think most of you have heard me tell this story. And then from there, I was like, right, bugger this. I don't want to be an employee. I'm going to be the world's worst employee. And when I read Rich Dad Poor Dad, I was like, yep, I'm definitely not following my dad. He was corporate. So I went self-employed and I basically built IPS, International Property Solutions, and we helped about 2,500 people buy houses. And I thought that you go out and you buy 10 houses and they'll be free. And all I did was work harder, and that wasn't working. So my strategy of working harder didn't work. So I ended up paying $15,000 to go to Business Mastery with Tony Robbins, and then $50,000 to go to Business Mastery 2 in Fiji. I paid $8,000 to go to Gulf Tours on a buyer's trip, $12,500 to go with Roger Hamilton. And I must admit, when I look at these numbers, Alex, and the baby money we charge people for the mastermind, this was like in 2010. So like in today's money, that's like 50% of that. I seriously think we've got to up our own game, because the amount I was investing in myself was about 4 times what we're charging people at the moment to join our mastermind. So something I've been thinking a lot about on this car trip, because I'm reading this book, 10x is easier than 2x. And per the conversation Alex and I had in the jacuzzi last night, I think I'm going to substantially increase the price of the mastermind. It's far too cheap for the value. Then we moved to the business owner quadrant, and we built Wealth Migrate. We raised millions of dollars, and I spent $15,000 going to Singularity University, $40,000 with Richard Branson, and obviously with Wealth Migrate, we've facilitated now $1.3 billion, paid out $31 million in dividends, and we've got people in 178 countries. We were also the very first platform in the world, real estate platform in the world, to go on the blockchain. So some pretty massive accolades in the space. We won many awards all over the world. But when I finally stepped into the investor quadrant was actually this year, when we were in London and we were going up the tallest residential tower in London, the biggest penthouse in Europe, and I went down the lift to get our investors, and I saw the construction company just over the road, and the company was O'Shea's, which was the one I used to work for. And it did go through my head that if I hadn't have read Rich Dad Poor Dad, and if I hadn't have taken that leap of faith, the chances are I'd still be working in London wearing one of those bloody yellow outfits in the pissing cold, pouring concrete. But not that day. That day we went to the top of that building to negotiate with the developer. And funny enough, I was on a call just this morning. I'm still trying to close this deal, by the way. It's the financing that's created a real problem here. But I desperately want to do this because it means we'll go full circle in terms of owning the tallest residential tower in London. So I was not just financial, but in mindset, in identity, and in impact. It was all about this whole transformation. The biggest shift wasn't tactical, it was internal. I had to unlearn decades of conditioning. I'd stop thinking like a worker or even like a builder and start thinking like an owner, an investor, a steward of capital. And the only way I did it was by investing heavily in myself. To make the leap, I invested more in personal development than anything else. Books weren't enough. I sought out the best mentors, joined elite masterminds, paid for coaching I couldn't afford at the time because I knew I couldn't afford not to. I learned from people like Robert Kiyosaki, Tony Robbins, Richard Branson. I flew across continents for events. I sat in rooms with people who were already free. I surrounded myself with mentors who were already been. But this is a good example. I think you might have heard me talk about this, Alex, but when I was on Necker Island with those 25 people, including Richard Branson, like I was the poorest person by a long way. I mean, the one guy just sold his business for $800 million. The other guy was like 23 years old and had just sold his business for $20 million. And it just blows your mind, and it just makes you think at a whole different level. The compound return of that inner investment changed everything. The real investment was never money. It was mindset. The shift from working for money to making money work for me changed everything. Because the truth is, you can't become an investor with an employee mindset. You can't build freedom if you're stuck in survival. You must rewire the way you think about time, money, risk, and leverage. You must see yourself not just as someone who earns, but someone who owns. Today, I'm blessed to help others make the same shift. I know how it feels to be stuck, and I know what it takes to get free. The investor quadrant isn't just a destination. It's a mindset. It's a decision. It's a way of life. If you're ready to step into the investor quadrant, just know this: you don't need more hustle. You need more perspective. And that starts with upgrading your mindset. And that is that, ladies and gentlemen. So this one is very much based on mindset. and the changes in the mindset. And I'd like to know if anyone's got any questions um, and or any comments in terms of what I've shared. Um, yeah, I don't know, Alex, what your thoughts are. Um, I have something I want to say, but
As pe-
I don't want to say it until I get some feedback.
Sure. So I just want to give Derek. Oh, there we go. I think we got you now.
Yeah.
There we
Okay.
go.
Sorry. For some reason, I lost the picture, the Zoom picture on my screen, and I could hear you and everything's going, but it didn't work. Anyway, nice to be back, Scott. And yeah, it's fascinating. You might as well be telling my story just at a different scale, but it's just I can completely concur with what you're saying. What I put my hand up when Alex shared his story about the coach and so on. One of the most important things about that transition from an away state to the towards state is the decision that you take yourself. You've got to be intentional about it. You've actually got to do something about it. I saw Shauna immediately asked Alex, where do I find a coach like that? That's the first step. That's the thing, that being intentional about actually doing something about it. Yeah, I wrote an article for a magazine a while ago, specifically about that, about farmers. It was in a time when farmers we were seeing a lot of farmer suicides and things like that. And I said, you've got to fight with everything in you to move from the away state towards state. It's just do something positive. Just take control of it. It's so important. I just wanted to share that, Scott. Thanks very much.
No, perfect. Just
Yeah.
by the way, how did that appointment go? Did you find out?
Yeah, yeah. I'm the deputy president of Agri SA now. Yeah.
Nice. See, I thought we just mentioned that you're in the phase of royalty, when it comes to the agricultural industry. Huh?
Yeah, well, at this point, it's now no longer just the grain farmers. It's all farmers, citrus, lychees, whatever, veggies. So it's an umbrella organization. It's the whole thing.
Awesome.
Congratulations, dude. That's a huge honor.
Thanks.
It's a massive tribute to everything you've put into the industry. So you're obviously
Yeah.
you're obviously a very tried and respected leader in the community. So well done. It's amazing.
Thanks, Scott. No,
Awesome.
appreciate it. I make work for myself. They say if you want to be a toffee, you're gonna get licked.
Yeah, well, see,
So that's it.
I hope you're not like my brother. He sits on the SASA Council, which is the South African Anaesthetist Society, and they do all of this work. They take quite a lot of risk because they represent the organization, and it's all voluntary.
Yeah.
And then I was like, well,
No.
why don't you charge for it? And they were like, no, we're not allowed to. I was like, that sounds terrible. So you volunteered to do admin shit work and not get paid.
No, we get a little bit, but not, it's yeah, a large portion is voluntary, but there's a good reason behind that. But yeah, we do get remunerated, so it's fine.
Fair enough. You can see the difference from me between the doctor and the businessman. I'm like, bugger that. I'm not
Yeah, yeah.
volunteering for free.
Oh, you're right.
Anyway,
Cool.
awesome. So anyway, I
It's
wanted.
nice to see you guys again.
Yeah, no, it's wonderful to have you, Derek.
I'm sorry I missed the mastermind session. It
Yeah,
sucked, but I couldn't help it.
no, it's all good. Well, you were getting elected to, one below the president of the country. So,
And
um,
you did see I did do my accountability. It was done. I don't know if you read
yeah,
it. You
I
wouldn't have
know.
had cause to, but it's done.
No, awesome, dude. Fantastic, fantastic.
Cool.
So what I want to do for the rest of the session is, I think what we should do, Alex, is break into breakout rooms, because I think there's a huge amount of value in people, talking with each other. I've given everyone that document. I'm going to put it in there again because I saw that a couple of you have only joined now and you might not have got it. What do you think of the document? Just type in the chat box for me what you think of the document, before I tell you what I think of the document.
God, I'm one of those that joined late, so I'm at a loss now. So what document is it? The one you've just finished
Yeah, the
going
one
through
I've
right
just, yeah,
now?
yeah, I've put it back in the chat room for everyone.
Oh, okay, cool.
Yeah. I think my big takeaway as we're getting all the comments through on the chat, Scott, is I think it's quite a nice artifact or a thing to look at and resonate with and actually think about your own story. Again, when I hear your story, I think of my own story. So it's just quite nice to actually use something like that to, just kind of get into the mood of talking or thinking about what is my story with wealth. We were chatting last night about, what is it that actually that we help, and what we talk about is, your wealth story. What is your relationship with wealth? What is your relationship with legacy and leaving a legacy behind? So those are the things that kind of come up for me.
Okay.
Scott, for me, it's very valuable to kind of go through. It's like a systematic analysis of the beginning of investing in yourself. So it's like self-discovery. It's like finding exactly where you're at, and what. It's only once you've done that that you can really uh, efficiently plan your next steps. And then and then what reinforces it tremendously is if you have some positive results in the steps that you take, then you kind of get energized in the process, and that helps a lot.
Yep. Yep. No, look, thanks for all the kind comments in the chat room as well. Look, I think it's one of the better documents I've ever put together. um, and I mean that sincerely, because it stemmed from the trip with Robert in June, and someone actually asked me a question, or I don't remember where it came up, but someone was like, "How do you get into the investor mindset?" I think it might have even been one of the questions someone asked me to ask Robert, and then I asked him, and he actually joked. I asked him twice in two different sessions. Once was private, and then once I had the camera in his face. And when I first asked him, it was quite interesting. And he said, "How do you get into the investor mindset?" And I said, "What's the single most important thing to be in the investor?" And he said, "Raising capital," which I find really interesting. And then in terms of the investor mindset, it's everything that we've been talking about. It's the financial education and everything in between. So on the back of that, I looked for something and I couldn't find it. Now, great, you can go and read a 200-page book, but no one has time to read a 200-page book. So I was like, right, well, I want to build a document, no matter which quadrant you're in, to help you do it, easily, like to give you a bit of a playbook. So I have to say, I like rereading it now today. I sit here thinking to myself, like, why are we not sharing this more? And so my invitation to you is pick 5 friends and share it with your 5 friends, because there's virtually no one in the world that this can't add value to, because every one of us is in one of those 4 quadrants. So yeah, if you think it's a value, you have my permission to share it with anyone you want. Because let's change the world one person at a time. Okay, so what we're going to do is we're going to break into the breakout rooms. And then, Alex, what I'm going to do is, because I'm on the road here, I don't need to sit around while people are in the breakout rooms. So we're going to spend about, what's it now, 12:43. We're going to spend 10 minutes in the breakout room, and then we'll come back and we'll regroup. We'll have a sort of 5 minutes left. And then, if there's any questions, I'll stay online, but I'll be on my phone. You don't need to watch me. I don't need to share my PDF anymore. And then, we'll be able to answer any questions that anyone has. Does anyone have any questions before we break into the breakout rooms? Okay. So I'm going to do the breakout rooms quickly. I'm just trying to see if there's any note takers. So we've got one note taker. Okay. My real request is go into the breakout room, because it's a bit of a nightmare if you don't. So we've got 16 people here minus one note taker, so that's 15 people. I'm going to do 5 rooms of 3 people, because I find the groups of 3 are a nice kind of number in terms of people. So we're going to do groups of 3. I'm going to be sending you now, and just accept it. Go into the breakout room. It's 12:44. We'll be back at 12:55.
Cool.
Now I want to compare the option for the average business owner that takes their money and reinvests in the business so that one day they can have a big exit and have the freedom, and they've got a, as you say, a 1% chance of success. And the other option is they start from day one acquiring good assets, and those assets pay them diversified passive income that provide them the freedom. The one has a probability of 1%, and the other has a probability of 100%. Firstly, what do you think? And secondly, create me a picture to represent that. Hello, everyone. So I gave you a little bit longer because I actually buggered it up. My maths isn't so good on Friday afternoon. Rather than creating 5 groups of 3 people, I created 3 groups of 5 people. So anyway, it is what it is. Any feedback, any insights, anything that came through that was useful? Alex, we're gonna have to like hire actors or something to join us at these sessions.
No, it's interesting to hear different people's perspectives of where they are in the 4 quadrants. And
Just my interest.
Definitely.
Please type in the chat room if you've played the wealth game or not. You know, I know I've played it once on a Friday session, but I'm just interested how many of you have played it. It's something that we're going to make. So Shona's played it.
the one that you used at the Wealth
Yeah,
Weekend.
yeah. So the one at the Wealth Weekend, yeah. So, um, look, it's because it's all these tools that I'm trying to create to help people realize where they are. Because you know, it's that proverbial if you're trying to get somewhere, the very first thing that has to happen is you have to know where you're starting. Um, um,
You're talking about the wealth game.
yeah, the wealth game, yeah.
Yeah, that's good.
So,
I play it regularly just to make sure that I know that that my answer stays the same, you know.
it's interesting. I wish I could get every adult over the age of 21 to fill it in. I think that'd be quite a surprise. Um, I'm dead serious. You think I'm joking? I'm reading a book called 10x to 2x, Derek.
Yeah,
You
okay.
haven't heard me talk about it, and the logic is I'm not going to. I mean, there's 15 of us online here. That's like wonderful. Let's change the world with 15 people. I'm like, right, how do we get it to 15 million people? Anyway, but okay, well,
Well, you
listen.
know how to start a movement.
Yeah, no, no,
You've seen that that video Robin Banks uses to start a movement.
yeah, no, completely. Well, I'm the idiot who's been dancing, and then Alex is the most important person because he's dancing
Yeah.
next to me.
Yeah. Yeah.
Um,
Yeah.
Okay, everyone. Well, listen, it's Friday afternoon. They talk a lot about the freedoms of being an investor and making your money work for you. Well, my UK property is paying for a weekend away. My mate and I, we started investing in London in 2002, and we've put ourselves up for a weekend, all being paid for by British pounds. And we are going to behave like 20-year-olds in Stellenbosch and go mountain biking and have a lot of fun. So I'm meeting him at 2 o'clock, and I will be back at work on Monday. But the reason I finish off with it, I think it's a very good metaphor for everything we're talking about, because this is a classic example of it. When I was 22, all my friends were employees, and they were spending their money on nice cars, nice watches, nice rent. And my mate and I were slumming it in a house, renovated the house ourselves. It's the easiest way to stay single, is to live in a house and renovate it at the same time. But how many years later, 23 years later, we're mountain biking on the back of that. And I think it's a good little story to finish off the essence of what today's session was about. So have a wonderful weekend.
Just don't go breaking any bones.
Dude, you're not supposed to say that.
I was about to say, don't phone me.
That's like saying so, saying that to a dude just before he runs on a rugby pitch.
Yeah.
Don't put it out there.
Anyway,
Is everybody?
Have fun.
have a wonderful
Thank you.
weekend, everyone. Bye then.
Yes.
It was
Bye.
nice seeing you all. Cheers.
Bye.
Bye.